My name is Frank Scapati, and I've been with the company for 28 years. I've been in the insurance industry. Just a little bit of background on me. I started when I was still in college. I started doing loss control for the company. I've known the Land family since I was 7 years old, so I grew up with Robert, and I knew Lynn since I was a little boy. They let me do loss control for the company, when I was young, because it's a good college job, right?
Mm-hmm.
You kind of work when you want to work, and it was a really good college job. So when I got out of college, I wasn't sure what I wanted to do. So Lynn said, come in, take a look at what we do, and see if anything interests you. So I started in claims, and I didn't like claims. I spent about 6 months there, and it's very educational. You learn a lot in claims, but it's depressing because you're dealing with people on what's possibly one of the worst days of their life, right? I mean, they're dealing with a really serious situation. So it was hard. But after 6 months, I moved into underwriting. I was an assistant underwriter. Then I was promoted to underwriter, and I was relocated to our Phoenix office. That was our first branch office that we opened as a company. So I went there in 1994, opened that office. 2 years later, I opened our San Diego office as the branch manager. In 2001, I was promoted to vice president with UCA, and at that time, I took over a project that we had started that was going completely off the rails. We were developing our own computer system, and it was behind schedule, it was over budget, and the guy who was running it was just not doing a good job. So they put me on as project manager. Lynn and Robert threw me at that, and I'm happy to say that we got back on time and got back on budget, and that's the computer system that we're currently using here today at UCA. Then just this year, I was promoted to president of UCA, so I worked real close with Lynn and Robert, and just setting long-term and short-term goals for the company, working directly with staff, oversight of the day-to-day operations, just general, do a little bit of everything. So that's a little bit about me. I've done a lot of different things in the insurance industry. I've been able to do a lot of things here at UCA. So, if there's anything I can answer question-wise for you guys, if you have questions about, different types of insurance or, different lines of, or parts of the insurance industry, I've dealt with a lot of different people. So, I might be able to answer some questions for you or be able to help you if you should need to ever talk about that stuff. So, my part of the class is we're going to focus on technology, and we're going to focus on the use of technology, where it came from, kind of where it's going. Yeah, so early origins of computer systems and the way they were used initially. We're going to talk a little bit about big data, which is a catchphrase right now. Everybody's buzzing about big data and what to do with it and how to use it. And we're also going to talk about kind of abuses of technology. We're going to talk about cyber liability, and we're going to talk about how that's currently being used and how it's being insured in the insurance industry. That's going to be part one. Part two, we're going to get into applications, and we're going to talk about the capturing of data. So you may or may not be familiar with the Accord applications. I know you are, Eugene, we talked about it, but the Accord is kind of the industry standard for data capture. So not just paper applications, but also they do a lot of digital stuff as well. They do a lot of interfacing with companies, and they set the standards for that, so we're going to talk a little bit about that. We're going to go over an Accord application, a couple different types, to get you familiar with what they are, how they work, and what they do. And then the last part is we're going to get into a little bit more automation. We're going to go over what, my next slide. Yeah, we're going to go over some self-raters. We're going to take a look and see what that technology looks like. I'm going to bring in a couple of presenters. Eugene's going to be one, and we're going to go through a rating process. And I'm going to show you guys what it looks like, and we're going to see the different types of insurance and the different types of data that different companies want to capture and what they want to see and why they want to see it. So, so we're going to talk about the history of technology in the insurance industry. So it's kind of interesting. When I started digging in and doing some research on this, I learned that the actual first uses, or the first computers that were used in insurance, was actually used in the late 19th century here in the United States. It was the very first data capture that anybody had really used, and life insurance was probably the biggest proponent of the early computer systems that were being used, because these were companies, even back in the late 1900s, they were, you know, 1 million plus users or policyholders that they had. So they had these big data files that they had to somehow maintain and be able to reference. And, you know, not only did they have a large number of policies, but these policies would go on for decades, because life insurance, you know, it's your entire life, right? I mean, it's not just a regular, like a CMP policy that goes year to year. These things would go on for 10, 15, 20, 30 years. So they needed some way to be able to sort that data and capture that data and be able to produce policies and billings and all those different things. So, you know, computer technology was where they turned. It wasn't really actuarial calculations that the early computer systems did. It was more, they were more like data processing systems. They were used, again, for printing of policies, for billing purposes, for invoicing. They were used for internal memos and internal documents that were used within the companies as well. So the early systems were, it's funny, when I was looking at the capabilities of them, 100 words is what their capabilities were. You could use and manipulate 100 words of data. That was the maximum that you could handle. So you had no real true data or memory like we would think of it today. Everything was done on cathode rays and tubes. So, you know, they were very limited with the things that they could do, but it still advanced the industry, you know, quite a bit. It was World War II, actually, that kind of took the next leap for computer technology. And a lot of the actuaries that were used in the insurance industries were kind of thrust into the war efforts, right? I mean, everybody got behind World War II, and a lot of these very bright minds and a lot of these thinkers that were in insurance, they were used in the computer, you know, divisions of all the military. The United States, they were used by England, they were used by the Germans as well. So a lot of different countries were using the minds that were coming out of the insurance industry for the war efforts. And, you know, I don't know if you guys saw the movie, what was the movie? A Beautiful Mind, I think it was. No, it was The Imitation Game. It was just recently came out. I think it won an Academy Award last year, but that movie talked about how, you know, they used computers to break the Germans' codes in World War II, right? The Germans had the Enigma machine. Sure. That was their thing. So, you know, they used these basically computer technology and things that they learned early on to break that code. In the early 1950s, the Journal of Actuaries actually published a letter that said that they were thinking about changing from a 10-based system to a binary system, just so they could work more closely and more easily with computers. So early on, you know, they were looking at ways that they could adopt computers into, you know, their daily use in the insurance industry. Between 53 and 59, big leaps were made in computer technology, and there was actually a machine called the UNIVAC. And this is kind of a funny picture. Not that one. This is a UNIVAC machine. This is what the early computers looked like. This was actually the first machine that was bought by, it was purchased by Metropolitan Life, or MetLife. You know, you may have seen our commercials with Snoopy. MetLife was the first purchaser of the first UNIVAC computer system, and it cost them $1.5 million. And this was the system that they bought. And they ended up making 46 UNIVAC machines, all told, and MetLife actually bought 3 of the 46 that were ever produced. So you can see that MetLife was an early adopter. You know, they were big in the computer industry. When they bought the first machine, there were 2 things that they wanted to achieve with it. The first thing they wanted to do was they wanted to tighten up problems that they were having with staffing issues, because they had big fluctuations after the war where women had come to the workforce, and now they were leaving the workforce because the men were coming home and they were going back to run their homes. So they had these peaks and valleys of workers. So they thought, well, we can use these systems to automate things. So that was the first thing they wanted to do. But the second thing, and probably the most important thing to the insurance industry, is they wanted to use the machines for statistical data that they were going to use for financial statements, and that they were going to use for tracking insurance companies' actual results. So this is the first time that they were actually able to use computers for true actuarial data, right? So they were now able to capture that really important information that would go on to help the insurance industry for the next, well, still today. This is kind of an interesting statistic. MetLife was the biggest financial institution at the time. They had 44.5 million policyholders, and they had policyholder surplus of $66 billion. So they were it. They were the biggest financial institution in the world at the time. In the 1960s, IBM, who we know today, you got a ThinkPad there, they finally got into it. And IBM took a different approach. So they didn't take it on like Univac did, where they made these massive machines at millions of dollars. They made smaller machines, more affordable, and they would lease them to companies. So that was the first time that they started leasing these machines to companies. So they would lease them for $3,000 a month. So now, instead of a few elite companies that were able to take advantage of the computer revolution, now all the companies were able to do it. So this spread out the technology over the industry as a whole, so it pretty much helped everybody. There was another slide that, anybody know what this is? This is so before you guys' time, but these are punch cards. So the way that data was entered into machines was it was a punch card operator. So you would give a person information. You would have the person's name, address, and phone number, for example. That data would be entered onto a punch card. So this actually captured all that data. This card would go into the computer, and that's how data was actually entered in the machine. There was no keyboard, there was no mouse. It was all punch card. So you can see. I mean, it was a very archaic technology compared to what we're doing today. But this is where it all began. This is kind of where it all started. So it kind of went along this way until the 1970s, the late 70s, when the personal computer finally came into use. And it was at that time that you started to see computers not just being these huge massive machines that took up entire floors of a company, but they were actually finding their way to people's desks. So now it was the individual, the common worker, who was able to use computers in their everyday life. So now you're starting to see people use individual desktop processing and things like that. So that took the computer industry, or the insurance industry, kind of on its next leap. And computers today, computers are great, but they're only as good as their software, right? So IBM in 1962, they finally took an approach where they were going to bundle up software with their machines. So they started making industry-specific software programs, and there was one called the Consolidated Functions Ordinary, or CFO, and that system basically took a bunch of different things that were used on a common basis and bundled them together into one process that took it from the initial capture of data, right? So the application process, handed it off to the policy process, and then handed it off to billing. So it kind of was an integrated software program for the first time, and that happened as early as 1962. In '69,